Oh, hey, you got me. What's up? It's another Sunday. Quiet week. I don't know. Pretty boring. What do you guys got going on? Um, yeah, quiet week in the markets. I don't know. Was hoping we'd get a little bit something exciting that happened we could talk about, but such is life. Such is life. Hey, you you get what you get, and you don't throw a fit, right? Or is that how that goes? You get what you get, and you don't throw. What did my wife used to say to the kids? I don't know. Steve, whiskey. Can I call you Marcos? Did that ruin it? Uh, anyway, Shannon, Pat, what's up, everybody? Yeah, so hi. It's been a fun one, right? Oh, for all of you watching, all 19 of you, I'm going to share with you. Let me say, right now, I'd like to share with you, everybody, my market reaction from when the market closed this past Friday. And exactly, here we go. This is a look at a little bit of a look-see at what my reaction to the stock market was from Friday at market close. It gets me every time. God, I love that movie. Trivia, that's one of my favorite movies, Dumb and Dumber, ever. And yeah, my fun fact from the announcement on Wednesday of Liberation Day, uh, my net worth fell about $30,000. So that does not feel good. And those kind of my feelings, personified, I guess, by the late, oh my God, the late great, no, the great Jim Carrey. So yeah, it's and then here, if the party's just getting started, everybody. Why? Well, I'll show you if you just wait a second and hold your horses and let me do the thing here to show you, everybody, the stock market futures are looking mighty disgusting. I've got to put myself on there. How about that? Let's give you more real estate there to get you to see what's going on. Yes, this is gross. Right now, looks like the Dow is down another 3.59 cents. The what's that? The U.S. Tech 100. That's the Nasdaq, right? 4.5, almost another 5%. It's just becoming a thing here. So buckle up, Buttercup. And well, we'll keep it PG, but it's not gonna feel good. And yeah, so looking like if this holds overnight, we'll see. But the futures looking pretty. What's it? Larry David, right? Pretty good, but it's pretty bad. Yeah, we could talk about the. I don't. Whatever you guys want to talk, we can do news. I mean, I guess this is historic that the market has just gotten crushed like that, and I don't know what's going to happen. As I shared in the newsletter, uh, in my newsletter, I kind of ripped off Brian Bollinger from Simply Safe Dividends. So I did kind of a TLDR, and Brian, if you're watching, God, thank you. I love you. And but I did point out, I gave you all the credit and shared some of they looked at the biggest winners and the biggest losers from since Liberation Day happened. And it kind of, you see sectors and companies already separating into kind of like a typical recession playbook, which ones are probably going to do good. And we can go through that in a minute, but yeah, I want to see what you guys say. And yeah, if you missed it, I played a clip of Jim Carrey as Lloyd Christmas from one of my favorite movies. The scene where he's, just found out his best friend, Harry Dunn, is going out with Mary. And yeah, he gets sick about it. And that was how I felt. Market closed and I looked and this is the thing. It's so easy when the stock market's ripping and booming and we're all like, no problem. Like, I can't wait for a sell off. Then that's going to be great. But then when you're in the middle of the sell off, like when you're in the middle of the shit, as they say in war, it's a little different. When the bullets are flying at you, it has a different feel to it. So, yeah. But Bubble, look at you. You had the same look. I wish I would have waited. You know, I'm not psychic. We've been conditioned where market drops like last sometimes a matter of hours, it seems, but nobody knows what's going to happen. And, you know, I'm not a fan of the tariffs here that I, I don't know. If you guys have been following it, I don't explain to me how it can be reciprocal when some countries have a huge trade imbalance with us. Looking at you, Vietnam, other areas, just as I understand it, just have penguins on their islands. So yeah, and this is a great way of saying it, Tony. But for those of us that have many years ahead of us, right? People are pretty much on average, you know, hopefully have longevity on your side, like my family does, living into their 80s and 90s. If you're in your 30s, 40s, or even 50s, you've got a long time horizon ahead of you. So, oh, nice, Ray. So you're buying more Amazon. Yeah, and this is the time, right? If you want to get a great company at a really good valuation or a cheap price, there's got to be a glitch. There's got to be some stank on it. It's got to have some hair on it because otherwise, why would a great company ever trade at a discount? Well, here you go. You're getting the uncertainty. And yeah, dude, and that's a great point too, because I think you're looking at it the other way, right? Where if when they, you know, I laugh at the headlines when it says, you know, $11 trillion wiped out. It's like, well, if you sold, it's gone, but I understand it on paper, it's wiped out. So you're right. You also don't have it until you sell. So dude, that's a great thought. I like that, man. It cuts both ways, right? So you haven't lost anything until you hit the sell button, but you also haven't gained anything until you hit the sell button. I never thought of that like that. That's why we love you, Mr. WTF. Thank you. Congratulations, all the non-DCA. And that's my problem, dude. On Thursday, right? On Thursday, I'm like, buy, 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 buy. And I'm like, damn it, I've almost spent all my money. And now I'm thinking like, well, yeah, those were one of the ones I believe that did well, right? And we'll go through that in a minute. We'll look at the Simply Safe. I'll show you his newsletter that way. You know, if you want to pause it. Yeah, Kevin's retired too, so I'll be on your not on. I'll be watching tomorrow, and be curious to hear your. Oh, Tony, you have a property closing, so you're gonna get that money, baby. Keep it going. Yeah, Pat, that's a great. Oh, Pat, by the way, you you gave credit to Ryan and I wish I could have taken my own advice. Again, I seem to say that a lot, but Pat, no, I won't. I'll just summarize. You have a purchase that you're going to be in the near future, so you pulled money to put it in your high yield savings account, dude. Congratulations, that was slick. Not even slick, just smart. That's what you should do. What the hell happened there? I went blank for a minute. Kevin, am I selling any stocks? Currently, not selling any stocks, but and I told this to Pat, we have a 1.5 bath house, right? And for years we've wanted to upgrade to 2. So make our half bath a whole bath and put a shower in. So we've been getting quotes from plumbers and whatnot. And, you know, when it's all said and done, it's looking like it could cost us around 5K. So, you know, I've been borrowing, like we bought the VW, the Atlas, and I thought about selling Nike just to pay for it. I could do a wash sale because we were already down. Not as down as we are now. We were down, gently down. And I thought, you know, I'm prepared for Nike's turnaround to be a long-term thing. So, you know, I told my wife, I'm like, maybe we just sell we have 105 shares of Nike, average 76 and change. And I was like, maybe we just sell that and pay for the remodel and then wait 30 days. We can tax loss harvest that. And then we just start buying Nike again at these lower prices. And we may still do it. I don't know. it would be a month or two probably before we would need to do that. But yeah, Kate, and buying time indeed. All right, let me go a little quicker here because my God, look at you people all chit chatting away. I love it. Yeah, young people should be happy because it's annoying. You know, Kevin, you're getting way better at it, but when somebody says something in the chat and then the person like me gets to it 15 minutes later, it's like, blue light special, shout out Kmart. All right. Some of you are buying. Yeah, everyone's, and what does that say? I forget the great investor that said, don't confuse brains with a bull market, meaning that everybody looks smart in a bull market, but then, all right, Shannon's buying. Tony sold UNH. They're actually supposed to be one of the better performers. That's, all right, a lot of you saying should be buying. And by the way, thanks for coming on. I look forward to this every week. I think it's crazy that you people, there we go. I said it. Shout out to when it was just a few of us and I used to call all of you people. But yeah. What are you so John, are you talking about in 2022, the drop? Because I don't know, man. We'd have to look into that if anyone. I haven't run the math, but I thought we just had like the worst. Didn't we just have the worst 2-day drop? Did I imagine that or dream that? Maybe I'm tired. By the way, who worked today? I worked today. So shout out. I worked at a Nestle facility that used to be called Nation Pizza in Schaumburg. And I was out last night with my wife. We went to a concert. We saw Teenage Bottle Rocket. So Daddy had to be up at 6 a.m. and we left the show at like almost 11:30. So, hey, we're powering through. We're doing it. I'm energized talking to all y'all. And yeah, maybe there's that's a thought I think I don't know if you want dating advice or marriage advice, but we'll circle back to that. I have some thoughts. Few shares of Google, Merck, and Archer Daniels Midland, Nick. Now that's interesting. Archer Daniels Midland. Yeah, we're always going to need food, right? They supply the food. That's a good one, Mark. If you're ever in doubt and you're a long-term investor, because a lot of us and I'll probably do that in a future video to show that the stock price or my portfolio has been cratering, but the dividends are probably flat, if not increasing, right? Yeah, and it depends, and I don't know. Do you guys ever feel like that where Mike, the dividend guy, Mike Heroux, I can't say his name with that French accent, but the francophone, he says that it's non-negotiable now that if a company he owns cuts the dividend, it's an immediate sell, ASAP, gone. Not even going to think about it, because a lot of us, and I've done it with AT&T, with Leggett and Platt, they cut the dividend. I'm like, I think it makes sense. And then I wait around and yeah. So there you go. Word to the wise, Frank. No panic selling, right? Panic selling is not a strategy, but holding onto good companies, or if it's the market. Here's the thing we know, right? The stock market, from every drip, drop, crash. Did I just give myself a thumbs up? I don't know why that happens. I'm still learning this, but what was I saying? Every dip, I think I said drip. I meant dip, drop, crash, correction, and bubble pop. The market has come back 100% of the time. Now, there's companies that haven't come back, but if you're buying the market, even the depressions, Ray, the market's come back, but you also have to have a store of wealth and prepare for the worst, right? Batten down the hatches, baby, because, hey, you want to be in a hurricane-reinforced building if you're going to be on the beachfront, right? That's going to give you a good percentage chance of riding out the storm. You got hurricane shutters on there, right? I'm thinking of my I don't know what to call her. My grandmother-in-law. My wife's grandmother has a place down in St. Pete Beach, Clearwater. She got the storm shutters on there, right? She lives on the 5th floor, overlooking the Gulf of America. I don't know, Gulf of Mexico, whatever. But she has a good chance. Her place has been okay. But if you're in a tent on the beachfront, you're probably going to have problems. So I think people that are invested in a lot of penny stocks, potentially some cryptocurrencies if things get a little bit dicey, right? But hey, as we said in the Navy, right? A calm sea never made good sailors. So, or it's something like that. A stormy, I don't remember. I probably just made that up, but it sounds good. It sounds about right. It's in the ballpark. Oh yeah, and so what? Again, what are you guys buying? Share it. One thing I'm looking at and thinking about is if we don't walk it back, or right, I think Trump he'll take off ramps. I don't think he's gonna go back on anything. So to change course, he'll just take an off ramp. But they're saying the dollar could get weaker 10 to 15% in the next 5 years. We've already seen a lot of outflows from foreign fund managers and institutional firms that are pulling money out of the US stock market. And they're going to start looking for somewhere that maybe they know better, that has a better potential return, higher dividend yields. But VYMI, the Vanguard High Yield International Fund, is something that I'm seriously considering. It's a few dollars off its 52-week low. So that's, oh, Kate, and you're 5,000 US is, I was just talking about a bathroom remodel we're looking at doing. So Microsoft at 330 seems like a good deal. That's crazy because I remember I started a position in Microsoft at like 210, and I bought those as starter shares, right? It's probably in 2020, end of 2020-ish. And I said, I'm going to buy these, but I'm really going to load up under 200. And it never went any lower. And there I was, I sat on 2 shares of Microsoft when it was I ended up selling them and probably put it into realty income. But yeah, tech. And again, this is probably the catalyst, right? Nosebleed valuations. I'm waiting for Costco. When can Costco come down? As far as I know, it's like a AI tech stock on steroids is how it performs, but it's safe, right? People are going to look for the safety, the places people need to go. So, all right, I'm almost caught up to all y'all. Oh. Your analyst friends, Caton, are starting to compare this to another GFC. Gotcha with your thing. It could be. And again, nobody knows, right? There's 2 types of people. There's 2 types of people. And those are people who know they can't predict the future. And then the people that don't know they can't predict the future. So I'd like to fall in the former, one of the people that knows I can't predict the future. So I don't even try. And right, it's just enjoy it. If you can, you're going to be okay. I mean, we'll figure it out. Hopefully, if you watch this, you underspend your income, right? That's what true financial independence or wealth is that gap between your income and your expenses. So whatever that gap is, right? The bigger it is, the better off you are. The tighter it is, buckle up, Buttercup, I guess. I think that's the second time I said that. We're going to put that one to rest, so. Nice. So you agree, Pat. Cut the dividend, I cut the stock. I might have to try that. So watch Nexstar cut the dividend for some reason next week. Oh, dude, they got hammered. Speaking of my Nexstar, I thought about it. I have 121 shares when it was in the 180s. Again, it trades in the last 3-ish years, the high 140s, low 150s to the low to mid 180s. It just keeps bouncing between those dollar amounts. So I thought when it was in the 180s, I was like, I wonder, should I sell 100 shares at 181? And then if and when, but I'm always afraid that the time that I do that is when it's going to go up and up and up and never stop. But once again, I could have done this probably 4 times now, sell my full position at 180, we'll call it, and buy again below 155. But, and again, that's getting cute. That's trying to time it. And I just have this fear that the one time I do it is the time I'm going to get burned. And 2 months from then, Nexstar will be at, I don't know, 250 a share or something ridiculous. And, Mark, you got 100 shares of, I don't know what CWENA is. We might have to look that up. What is CWENA? Oh, this for me, consistent. Yeah, I try to be, man. I know it's a game. I know that, and the algorithm surfaced it to me too as a Graham Stephan and Andre Jick. I saw it in the sidebar, and of course, what do they got? The red screen, the market crashing, and you know, I guess I don't remember what '90s hip hopper said it, but don't hate the player, hate the game, right? So they're just playing a game, and you don't have to watch it. And some of us don't want to play it. I've dabbled. Okay, I'm guilty. I've dabbled in it, trying to, but you're welcome, Janice. Wait, you well, that's wait, you're down. No. Oh, 49,500. I read that as $495,000. I was gonna say, my God, man, if I had a 40, I'd pour a little out for your portfolio there. Oh my God, I'm gonna get to Simply Safe here when I'm almost caught up to you guys, and we'll do that. You'll get some ideas. We'll show you the big winners and losers from his newsletter because I thought that was interesting. So let's see if anybody said anything here. There you go. Michael's buying Alphabet and SCHD. Yeah, of course SCHD. I had enough money from dividends, right? I got those SCHD dividends and a few others, and I spent it all at 27.49 or something, and then on Thursday morning, and of course Friday afternoon, SCHD's in the 25s. I'm like, yep, that sounds about right. But I'll be buying more. I'm just gonna keep loading into SCHD. And what do you guys think? Even if the dollar weakens, then we should want to invest abroad with companies that have broad exposure. Because as I understand it, if our dollar is weaker compared to some foreign countries and we sell stuff to those foreign countries, it's favorable when the dollars are converted back into US dollars, kind of like they've been experiencing. So I think some European investors, if they just invested in the S&P 500 over the last 15 years, then they have done better on, it was not crazy. I think whatever the number was, US investors got like a 200 something percent return, and Europe was just over 300. But I don't know. Those numbers may be wrong, but the principle, the idea is there and stands that it's not all doom and gloom if we have a weaker dollar, and maybe people stop spending so much and they invest more. And then that's good for manufacturing businesses. Oh, interesting thing too, right? That 45%, I read this over the weekend, 45% of what we export is imported. So what goes into the things we make to export, 45% of that is imported. So it's just an across the board crazy time, increases for businesses, consumers alike. We'll see. Retailers might bleed. Well, I don't know about all of them. Keep in mind, discount. If money's tight, what are you going to want? Probably TJ Maxx. I think, I mean, they're not publicly traded, Aldi, but they Agree Realty and Realty Income have Aldi as a tenant. I believe Realty Income does. So, that they'll still pay the. Is it really at 870? Oh, I didn't see that. Thanks for sharing that, because I've been wanting to get Costco starting an individual position in them under 800. So I'd like to see that giant start to fall. All right, let me go fast on these. I apologize if I don't get that one, and I don't know if I should get it. There's two type of people, airborne and legs. I'll have to think about that one. All right. Oh, sang from the army. Okay, thanks. I wasn't in the army, so that clears it up, right? But that's funny. Oh, Clearway Energy. All right, thanks for that. Nice. Hey, Lisa, I see your. I always get them popping up when I'm working. You stream at the worst times for me. You stream every day, don't you? Call you the queen of stream. All right, here we go. I am caught up, so let's pop. Sorry, good thing I got this pop filter, huh? All right, let's pop on over and do, before I take a sip of this, some Simply Safe news. And then we'll take a look-see on what Brian Bollinger and his crew at Simply Safe found. Yeah, you want to look at Clearwater, Steve? I can do that. Let me write it down because I'll forget. I'll remember Clearwater Energy. All right, here we go. Enough dilly-dallying around. I'll share that and give you more real estate. I wish it doesn't do it automatically anymore. I have to keep doing that. So, yeah, and you can see that I was looking at, indeed, the Vanguard International High Dividend Yield ETF. But it's kind of interesting that this shows the dividend growth is negative for the last 12 months. So, not sure what that's about, but they do have like 1,500 holdings. So, anyway, we'll get to the news. Let's see, where did we leave off last week? What's today, the 6th? So I think it was right around here. Did we talk about that? I don't know. Anyway, we'll start with this. If you're watching and we covered this last week, I can't do the math in my head. 6 minus 30. Yeah, I don't think we talked about this. Yeah, we talked about Lockheed. I think it might have been the last one. Anyway, IIPR got another dividend downgrade to 20, very unsafe. So careful, caution. I sold out of IIPR because I thought management doesn't have enough control over the commodity industry, kind of like a LyondellBasell, right? So, or Albemarle with the lithium. With the lithium. Isn't that a Nirvana album, Lithium? Anyway, Ford got a dividend downgrade from 50 to 40. I think some of you have been picking up Ford. It's the new tariffs. They refreshed this is a dividend king, I think. They got like 60 something years of dividend growth. Let's see here. Okay, never mind. 0-year dividend growth streak. I'm thinking of something else. I think a pharmaceutical company. Anyway, so they refreshed their outlook on Wesley Chemical Partners. Cogent, another dividend. They're just handing out dividend downgrades like candy here. Gets downgraded to unsafe. So I don't know what it is. They're that's right. Kind of like internet service provider. It says right there. So they are reaping. I didn't even read this one. It was a write up by then. But anyway, if you invest in Cogent, let us know. Bank Ozark, or I guess it's just Ozark now. Ticker OZK, raised their dividend 2.4%, which is, by the way, their 59th consecutive quarterly increase. So that's pretty cool. And are they a dividend king? 27 years. They are not, but hey, 59 straight quarterly dividend raises. You go. They reaffirmed Johnson & Johnson's. This flew under the radar. They got shut down again, rejected, Shaquille O'Neal style. I don't know who a good reference is now. That's the extent of my basketball knowledge. I'm stuck in the 90s. But yeah, we'll see. Their stock had got hit, but I think it came up a little bit though. But they still reaffirmed their dividend, thinking it looks good. And then again, Best Buy, big exposure. They got downgraded from 60 to 50, borderline safe. And then up at the tippy top here, we'll go to newsletter, and this one came out yesterday. So this is the intelligent income, and I'm just going to scroll down to the part I was telling you about with it was a long one. Here we go. So the preface to this is, if you're curious which areas of the market held up best and worst after the April 2nd tariff announcement, they did some digging, and they grouped the biggest winners and losers by sector, just so you can see how things are playing out so far. And yeah, you guys can see this. So they give a lot of companies here. Again, I'll go a little bit fast but slow. You can pause the video if you want to read them. But utilities were a big winner. So National, see names I know: American Water Works, Duke Energy, Consolidated, Con Ed, Exelon. Hey, I pay my bill to Exelon. If you're in the Chicagoland area and you see Com Ed, not Con Ed, Com Ed, it'll say an Exelon company. And that's because, yeah, we need the electricity. We gotta, I hope you're not choosing between keeping the lights on and your smokes, or maybe new Nikes or something, because you got to pay to keep the lights on. The consumer staples, right? People still need to eat, clean, and brush teeth. Kroger, Unilever, General Mills, all those, you got it. Church and Dwight, which I think Church and Dwight, right? They make, um, do they have Trojan, I think, right? Family planning, healthcare, essential products, pricing power. So Elevance, GlaxoSmithKline, J&J, McKesson, there's your United Health that you just sold. Affordable retail, yeah, the budget focus chains are doing well. People are buying. Dollar General, Costco, Casey's General Stores, that's a strong one. Shout out Casey's, which I think is the third largest beer distributor or pizza chain, I think. I used to have that in my head. Okay, let's go a little quicker here. Telecoms, yeah, AT&T, Vodafone, because people people are addicted to their phones. They need to keep that connection going. There you go. Tobacco, because of the inelastic demand, strong pricing power. So there's your Altria. Bond-like REITs, American Tower, Crown Castle, Omega Healthcare, OHI. Because people, I guess, it's essential, right? You need to keep those things going. Financial exchanges, if Kevin's still watching, I know he was buying or got CME Group. Yeah, trash collection, makes sense. I know this is, Jesus, there's a lot of these. We're almost there. Waste management, Waste Connection. We also send money to Waste Connection, which is Groot here in Chicago, not the Guardians of the Galaxy character. All right, franchise-driven affordable restaurants, so fast food, McDonald's, Canadian banks, which they don't like TD because their U.S. exposure, I guess. Canadian midstreams, so they move oil through the pipelines. Midstreams do gold. There you go. And then we'll go a little faster here. If you want to pause it, you can look. Biggest losers, apparel and footwear. We got Nike. Big box department store retailers. Interesting. So Best Buy, Dick's, Kohl's, Target. They got, Target right around 90 now. Home furnishings and decor, right? You're not, if it looks like we're heading toward a recession, you're not going to be buying stuff from Williams and Sonoma. There you go. The commodity chemicals, because the tariffs, they raise costs on the inputs that these companies use. So Celanese got whacked hard. LyondellBasell too. There we go, almost done. Semiconductors and hardware tech. Littelfuse, I use them. They make fuses in my, that's one of their products. Investment firms, private equity, because they're asset heavy. What else you got? Banks, consumer finance. Well, yeah, Capital One. I saw Visa kind of got hit a little bit, but they're not a bank, right? They just process the payments. But if less people, right, because credit risk rises in a slowdown, less people using their credit cards. All right, almost done here. Industrial equipment and tools. I told you it was a long article, right? I tried to do the TLDR. Transportation, yeah, shipping volume could fall, right? FedEx, UPS. I like Old Dominion. That's been on my watch list. China exposed, Starbucks, right? Heavy exposure into China. So got a little tiff with them going, right? The retaliatory. Energy, oil prices slid on fears of slowing global demand. So most of your oil companies, and then travel and leisure, because it's one of the things you're going to cancel. So, you got Disney on there. Yeah, you get people cut that from their budgets in downturns. And again, among the first to feel a consumer pullback, who's going to go to Walt Disney? Some people. Anyway, that was that. But, and Clearwater. Let's look that up, and then I'll pop back into the chat with your big selves out there. Wait, Clearwater paper. Wait. Oh, Clearway. Yeah, Clearway Energy, right? So I think that's the one you wanted. Yeah, it looks like it's undervalued according to Simply Safe Utility. Let's see where they are. They own 150 assets. They don't give region. So renewable electricity. Let's see a couple things you can look at. You can pause it if you want. 5-year dividend growth after they cut it before the pandemic. Yeah, I've never looked at this company, so looks like it could be undervalued based on the 5-year average dividend yield. So that's dividend yield theory. Says it should bounce back. And yeah, but it's not, if you look at its 52-week price range, it's toward the higher end, but I don't know. I've never. Oh, it's a master limited partnership. I missed that, did I? Is it? Oh no, it's qualified. I don't know. They got MLP on there, so maybe it's, I don't know. I'd have to look. Yeah, that's weird. They might need to check that because they show they have a distributable cash flow uh, payout ratio. So anyway, looks like it could jump in the next 12 months, but I don't know. I don't know enough about this company to give any kind of a definitive. It just looks okay, I guess. I don't know if you're chasing that 6% dividend yield. I would say look into the company first. And yeah, nothing crazy. Debt's coming down, so I don't know. Its interest coverage is a little bit low. My God, that was a long one. I'm gonna die here. All right. Oh, that's great. Lesotho, didn't they get a? They got hit with a crazy tariff, right? I don't know what they make there. Uh, let's see. I'm kind of scrolling back up here. Adam, I probably did say that. Guilty as charged, but I don't know what you call that. All right, so that was a long one. I hate being away for that long because we looked at Clearwater. Well, Nike's going to be down. It could be. You know what, man? I don't. It's funny. I understand people say slave labor, but when you think about it and you look at it, people are lining up around the block to have these jobs, to have the privilege of being in a warehouse, making shoes 6 days a week. How many Americans are going to line up around the block to do that? Probably not a lot. But it just goes to show you that if you're working in the hot baking sun in an agrarian capacity in a farm field, I don't know what they have, rice paddies over there all day baking, and then they're like, hey, you could be indoors and just like put shoes together. People are like, yes, please sign me up. But when we're over here, we're like, oh, it's slave labor. They pay them pennies, but it does become competitive because other companies move there, like Hoka, right? Deckers owns Hoka. Hoka makes most of their shoes, I think, from Vietnam too. So, but then if you want to attract workers, you got to pay them at least as much or a little more to get them to hop over from Nike's factory. And it kind of helps start lifting people out of crushing poverty that we don't understand here. But it's easy for us to say that it's slave labor. So I don't know. They're not going to pay them $50 an hour yet, maybe $50 a week, but you know. Yeah, Gant, I'll do that for you, buddy. We got time, but I'm going to catch up in the comments for you. You want ADP and GS. I know ADP, we've looked them up before. They're solid. Goldman Sachs is going to be solid too, so we could go those get those quick. Oh, I think you're asking what are you asking? Just how we feel? With our hands is how we feel, K10. Feel right now. Feeling good. I feel very open, very, very clean. Hey, Trevon, Trevon, what are you going to make your ETF with? And that's funny. We all kind of make our own ETF, right? But the thing that you have to remember is the more stocks that you hold, the closer you will be to just starting to track the entire market, is what they say. So that's kind of like was Charlie Munger's one of his things and pushback against people owning hundreds of stocks is that it's really hard to move the needle. And he loved playing bridge, and he was fond of saying that kind of like with poker, when the odds are in your favor, you bet heavy. It doesn't mean it's going to work out. But if you're more of a risk taker and you think you understand a business and it looks like a slam dunk opportunity, then by putting a lot of money into one thing can really move the needle on your net worth or your portfolio. But But again, hey, they've been wrong before, so you got to be right. And it's I don't know. Sometimes I don't. I think I'm smart, and then I look. I'm like, I didn't do so well on some of these. Manel, we did not talk about ASML, and they just make the lithography machines for building that the chips are made. So they're making the machines to make the chips. So I think they're a pretty good company. But if that starts to dry up, money starts getting shifted elsewhere. Hey, Church and Dwight is Arm and Hammer. That's true. That's true. And what else do they got? I don't. They got a lot of products. Maybe we could look that up. Adam, I love it, man. Do you use Arm and Hammer with Trojans or use them separately? Might not. You could try. Hey, I don't know what kind of weird stuff people are into, but have at it. It's free. It's legal. You're a consenting adult with your own body. So if you want to try it, go for it. That's what I say. Don't knock it till you try it, but I'm not going to try it. I'll let you try it and tell me how it was. So there you go. Hey, my guy, he's another ski. I love the skis. I was born a ski. He's buying MasterCard, American Tower, Prologis. I looked at Prologis, but their AFFO payout ratio is kind of starting to creep up in the wrong direction. So that kind of gives me pause. And they did cut that dividend during the GFC. So now waste management, yeah, that's if that ever fell, that could be another no-brainer because I mean it's almost like a duopoly between Republic Services and Waste Management, and then you got the little brother chasing them in Waste Connections. Use Arm and Hammer, okay. Yeah, I love it. I love it. You can be dirty on here. I don't care. I mean, I might not always read it, but I can't prevent you from typing what you want in the chat. All right. Scrolling down. Low paid labor. Yeah. Yeah. I guess slave labor, low paid labor. But again, man, I don't know. That's what do we want? Everybody that's bought a product, I'm sure this shirt I'm wearing is made from China or Vietnam, somewhere over in Asia, but Asian Pacific. We want cheap stuff. It's like the double-edged sword. Like people are like, they're paying these damn slave labor. Yeah, but you're buying what they're sending over here because if it was made here, you're going to pay $500 for a pair of Nikes? No, but people will pay $150. So it's, that's, people made a choice. I do think though, but blood diamonds are another thing. That's a nasty industry. When they get kids over in some of these other regions, that's nasty. The whole blood diamond thing. Yeah. Next Era Energy or Vistra Energy. Next Era is. We've looked at it a few times, Manel, and it's getting a little bit cheaper. But if anybody has an opinion, throw it in there. They look solid, safe. They started shifting a lot into, right? They used to be Florida Power and Light, and they're shifting a lot into the renewable energies, which I don't think they've seen the return on that investment quite yet. Yeah, that's what I've been thinking. They're not going to line up for those jobs at minimum wage, right? And that's like the thing. Who's going to line up? How many Americans do you see lining up around the block to get a job working 6 days a week, whatever, 12 hours a day for $50 a day? Not going to happen. So, but yeah, it's an unfortunate reality. And I guess the way you could sleep well at night is to think that they're getting a job. And if more companies go over there, then the poverty level should start to get better, right? You got Mr. T over here with the jibber jabber, the jibber jabber. What's up, man? What's up, Darth? What's going on, man? Yeah. Yeah, you know what? I could probably, yes and no. I'd have to think about that one. As somebody who had been in the US military, I didn't get paid a lot in the beginning. And yeah, it's it's probably best not to look at your portfolio. Switch if you have the opportunity, or the just switch it to the dividend income. That's what I'm going to start looking at instead. So instead of seeing that my portfolio dropped another $7,000 in a day, I can like buy something and then like, oh sweet, my annual dividend income just went up $6. Boom, there you go. just until the storm's over, but when will it be? I don't know. All right, let's I'm gonna get caught up to you guys here. Because I hate it when you do it, Kevin Burgess. I'm like, I make a comment and I'm like, respond to my comment. I've been waiting for 30 seconds, Kevin. Come on. Picking up some Apple with the recent downturn. Nice. Dry powder. Yeah, Nike, I think it's so cheap here, and we saw it reverse, right? It took a little bit of a spike up because Low Tam was his, or Tam Lo, I get it confused. The leader over in Vietnam, that's the Socialist Communist Party, whatever it is. He wants to negotiate no tariffs, 0%. So that's why Nike and a lot of the companies tied to Vietnam, their stock price jumped. Yeah, actually, high tech. If you get the newsletter, you see what I bought. But I bought just a share of VTI, and I was too early. I could have waited. I bought a share of VTI at 264 and change, and then of course, less than 24 hours later, it's at like 252. I'm like, God damn it! I should have. You see, but oh well. It's fine. I'm holding for the long term, and I wanted to build out that VTI position in my in the portfolio we share. So I wanted to get it a lot bigger so I can buy more. Hey, when the stock prices are dropping, you can buy more. So it's always a benefit there. You're buying SCHD, yeah. I probably will too. PLD, I'm thinking about it, but I already have Agree Realty Income, and Vici Properties. So I don't know. Prologis has faster dividend growth, but if we face a nasty, severe recession, and especially if we have these tariffs, then that could affect the tenants, because I work in a Prologis building at least once a week. Here in the Chicagoland area, there is a ton of those. So, I don't know. They might have a problem with their tenants, but we'll see. I'm thinking about it. Tariffs are agreed to, peace with Russia and OPEC pumping gas. Yep. And that's the thing. Who knows? You know Trump, right? Maybe we have three political classes now. We have the Republicans, the Democrats, and Mr. Trump. I don't know. But we do know that he could all of a sudden just, I don't know, have an epiphany and eliminate the tariffs that he imposed and all. What do you think would happen? Market's going to just explode, and then he can say, hey, I fixed the stock market, right? And he'll say it just like that too. My God, I love you people. Look at all these comments. So it's solid, man. I don't know if we'll have time because I want to get to a couple of these others, but maybe we will. It is, yeah, we'll look right now. I'll look at a couple quick. I'll just do the stock card since we're getting low on time here. But yeah, Costco's just, thanks John for sharing that. It's solid, man. It is one of the most solid companies I've looked at, and it has a dividend safety 99. The dividend yield is small, but it grows quickly. But this is a business that I would love to own a lot of outright, and I missed it, so I'm hoping for it to drop. Yeah, they do need good tenants, but in a severe recession, almost everybody's going to feel some level of pain, just more than others, right? You sold all your Vici to start a position in Google and Uber. Okay. Yeah, I could see that, man. 30 years. Yeah, and I think about that too, how you say that. I love the monthly income from ADC and Realty Income, but I have them in the retirement account. But I think about that too, man, because the dividend doesn't really grow a lot. It's just essentially, even Sumit Roy, Realty Income's CEO, said during one of those investor conferences I listened to, he's like, look, we pay a stable and solidly growing dividend. So if that's what you're going to buy Realty Income for, and if you want growth, then you may need to look elsewhere. So in so many words, he was saying, look, we're not a growth stock. We're never going to be a growth stock. But if you want reliable monthly dividends coming in, and that's a decision you have to make. So, okay. I'm almost there. I'm almost there to catch up to you guys. The market down. You did. I don't remember, but I'll take your word for it. I'm sure I could go back and look at the chats, but well, I hope you're, well, I don't know. We'll see. We'll see. You were right on that one. I'll give you that. But will you be right about the next? I don't know. All right. Yeah, it could. It could, man. And it's been pretty good, right? That strong in robotics. Honestly, I haven't even looked at that. But when progress happens, yes, right? It's called creative destruction. Some people are put out of a job, but things get made quicker and cheaper and a lot of times better. So it's like that's the trade-off. And then new avenues, new jobs open up, new things for people to do. But will we ever get to a point where we're all just sitting around doing nothing as AI does everything? I don't know. Maybe that'd be Wall-E, right? Remember Wall-E? All the people on their the scooters. PSTL, yeah, I had looked at them a while ago and I was turned off. I can't remember why I was turned off, but they started in the 80s, so they've been around for a minute. Yeah, you're right, man. And he could have already started the exodus towards foreign investments. Just and that could be a lot of what the drop is here is foreign investment dollars. Just people, just no, we're done. We're gonna reshore our investment dollars or something. Maybe I don't know. All right, let's look at these couple for you. 80. Well, I'll just show you the stock cards because I'm pretty much caught up for ADP, and I'll even do Costco because it'd just take too long to go through and do the whatever super quick analysis. So there's ADP. Has a, gosh dang it, I don't know why this keep happening. That's what I wanted to do. So ADP 97, dividend yield of 2%, very strong credit rating. Let's see the dividend growth. So there you go, 50 years, they're a dividend king. That's right, I forgot about that. So they grow the dividend very fast lately. So, I mean, come on, very good company. And let's see the valuation. It's right in the middle of fairly valued, so reasonably valued for, according to Simply Safe. So there's ADP. Goldman Sachs, yeah, that could be one that struggles, right? For investment banking and brokerage, if got shenanigans going on with the market. I don't know. What do you think, Adam? With a company like Goldman Sachs, I've never dug deep into them, but 1869, yeah, let's see. Financial advice for, yeah, so they'll sponsor IPOs and stuff, right? They can do that. Helps companies and individuals borrow and lend money and engage in trading activities, stocks, bonds, currencies, and commodities, and manages financial. So obviously, if we're in a recession, how much of that's going to be going on at a large scale? Probably not a lot, but 13-year dividend growth streak. They grow it quick. Oh my God, what are you doing? Stop it. There you go. May 30th, they go ex-dividend estimated. But yeah, right, reasonably valued. They have an expected price of 422 to 516. So, and remember, you don't have to buy a whole share. A lot of people, they say like, I can't afford that. Well, if you can afford $5 on Schwab with the slices, you can. And remember, there's no shame in buying $5 of Goldman Sachs, because whether you're investing $5 or $500 million, your percent gain, or hopefully not a loss, is going to be the same on that money. So there you go. And what else? Oh, Costco. So yeah, Goldman Sachs. I don't know. I'd have to do a little bit more research on that. But like Costco, I know we go to Costco. It's the $100 store. My wife runs in for something and we drop $100. Yeah, still overvalued. So yeah, I'm looking for right around 775, even under 800. I'd pay a little premium. So hopefully, hopefully, I might even sell some other things just to consolidate into Costco. But uh, just stupidly fast dividend growth, 20 years dividend growth streak. And I wish I could go back in time and just go heavy into Costco, but I didn't. So yeah, it looks overvalued. They expect, based on their 5-year average PE, 636 to 777. And I agree with that. It's just too high right now. So it's got to come. It's stupid. Yeah, PE was like almost 60 on it. Now we're at 48, which their 5-year average is 37 and a half. So those are all solid ones, but well, Harsha, Fibonacci sequence. I mean, I know it's all technical analysis, but it still doesn't predict the future, right? It can say what is likely or might happen. And that's something I missed, like Warren Buffett would say, right? I have to bring him up once at every stream or I'll be removed from the cult. I don't make the rules, but I'll get my Buffett cult card or my Berkshire cult card pulled. Is that he said we want, like Ben Graham taught him, we want the stock market to serve us and not instruct us. So if you, and I've done this before, I've sold stock based on the chart, right? Based on technical analysis. That's the stock market instructing you and it's not serving you. So, I don't know. That's his words. If you don't like it, blame him. I'm just parroting with what our Lord and Savior Warren Buffett said. Sorry, I'm having a little bit of fun with that. Adam, yeah, I don't know. We'll see. But hey, this is one of the things you have to worry about when a president is in their last term. Uh, that's a good one, Adam. I guess again, I took Charlie Munger's advice on that, and he said that bank stocks were not super difficult to understand back in the day, but this was a few years ago. He said now bank stocks are very complex and hard for them to understand. So, it doesn't mean that nobody can. It's just me personally, if it's Costco or Goldman Sachs, which we were talking about, I understand Costco way a million times better than a Goldman Sachs. And I would probably be fooling myself, right? They say the easiest person to fool is yourself. So I guess I can't even believe everything I say, but I believe, to the best of my knowledge, right? Like the law, like I'm on the stand, that I understand Costco way better than Goldman Sachs. Managed money put in the market, limited capital. Yeah, I'm pretty much tapped out. What I would likely do is if something crazy happens, yes, everything will likely be down, but if Costco just keeps plummeting, I probably will consolidate some of the positions I've been holding. I was talking with Ryan Williams about this. I own uh, companies like AbbVie, which is still good. Maybe not them, but I'm just going to tell you, AbbVie, McDonald's, Lockheed Martin, ExxonMobil. Those are 4 stocks that I haven't listened to an earnings call. I haven't read an annual report. I've hardly followed them other than just looking at the stock price and seeing the dividends come in years. So companies like that, I would probably just take the hit on the dividend income and put it into Costco. And again, I've like 10 shares of McDonald's, 10 shares of Lockheed Martin. Haven't added in a long time. So I would, I would probably just sell those, consolidate into Costco. I listen to the Costco earnings calls. I don't even own them. So I just like to pretend I do. So yeah, good company. So yeah. Oh, is the sweet spot. I thought you said in the sweet spot. I'm like, yeah, not yet. Yeah. And that's historically, right, man? So if we can get it back there, and it will, it has to. It can't sustain these. Well, here, I mean, I guess it could, but oh, you're right, Bubble. Thanks. I don't know. Whatever. Thumbs up. I enjoy this. I literally get. I was telling my wife that the last couple months between YouTube and Spotify, that it's been breaking down into probably about $40 a week combined, which is silly because that's far less than I make in 1 hour of my job, you know? So this is always a labor of love, and I don't think I'll ever be a full-time YouTuber. And you know, if it ever came down to it and I get super super busy, I'll always do the live stream because this is just fun for me to do. I really enjoy this. High tech, I think my buy target is under 800, but Simply Safe things call it like the mid 600s to like 775 ish. And yeah, Starbucks down as well. They could struggle a little bit, Harsha, you know. But again, that's what I might do. We'll see. But oh, let's take one more look. I'm gonna look with you guys at the futures before we wrap this up. Let's see how. Oh, did I close it? Oh no, I still got it open. Here we go. So it's gotten it's a tad better. Nasdaq's only down 4%, and the S&P 500 is down 3%. So that's sad. That's scary. That's where we're at. Where I was like, oh, it's not looking so bad. Because any other day, if the futures were down 4% or 3%, we'd be freaking out. But actually, as we scroll down, it's down everywhere except South Africa. They're up. But yeah, it's gonna be nasty unless there's a miracle overnight. Yeah, looking a little ugly. But hey, remember what we said, right? Calm seas do not make a good sailor, and we want to be good sailors, right? On the good old USS Dapper Dividends. So, all right, these we'll stay the course. Michael, you're gonna be the last comment. We'll stay the course, and I'll be here next week. You know, I don't know what I'm gonna do for a video this week. Maybe I'll do the bear market porn. I don't know. I probably won't, but maybe I'll tie it into something like, you know. Anyway, it's Sunday night. It's time for yours truly to turn my brain off and have a couple adult beverages and watch some television with my family. So I love all you people for coming on in, and yeah, I love it. See you guys in the next episode, in the next live stream. Bye.